and welcome. This is John Gatewood with Gatewood Wealth Solutions. Welcome to our weekly market commentary broadcast. With me today is our Chief Investment Officer, Aaron Tuttle.
I am glad to be here, sort of. I've been up, I think I got 2 hours sleep the previous night, and been up all day trying to understand things, so I'm partially here.
Well, this is the day that we have been waiting for. Finally, after hours of waiting in line, people getting all their votes in, it has been one interesting election, hasn't it?
Well, only a few more days to go, probably.
Yeah, unlike the past, it's going to be a while before we know the actual victor. But let's get right down to it, because I know that our audience is very interested to see what we think about the market and the economy with this election. But one thing I do want to note is that, you know, all during this time, the polls were heavily weighting Biden over Trump, and we've always been predicting that, based upon our research, that it was much closer than what was being portrayed in the mainstream media. And I think that's a real kudos to our team for picking up on that. So let's jump right in.
Absolutely. So just want to spend a moment on the slide that we always spend a moment on. We want to spend most of our time today on the election. But the ISM Manufacturing Index, which is a good indicator of our fourth quarter rebound in the manufacturing, was as high as it's been in 2 years. So still seeing progress on that forecast. To our other forecast, though.
Yes.
So here was the 2016 results that we were trying to make a baseline off of, and we were looking at this. We could definitely tell this was going to be a close election.
But sure. Now it's even closer than what it was back in 2016. So let's talk about the predictive models and walk us through how we got to where we are.
Right. So most of the mainstream media, I think the best to look at, or the best example, is 538. So 538 electoral college votes, Nate Silver, Moneyball, and whenever it comes to demonstrating the math and the way that they do it in an artistic way, man, nobody beats them. So if you're paying attention to the New York Times election status, which I think was the best website, this is 2 elections in a row, a lot of that is coming from Nate Silver. They had a 10% odds that Trump would win or not. Now, granted, it's a binary outcome, right? So it's either yes or no, and you could be right, which it looks like Nate Silver was right on the outcome of a Biden victory for all the wrong reasons. What we didn't see was that landslide victory across the board, that big blue wave. Actually, the Senate, it looks like it's going to stay Republican with a marginal lead, and the Republicans look like they're going to actually be picking up seats in the House. So that blue wave prediction, these massive turnout prediction for Biden, did not prove out to be accurate.
But it was a massive turnout.
It was a massive
the largest turnout, I guess, as a percentage of our citizenship in over 100 years.
Absolutely. Well, we're a larger country, so if you look at it on a nominal basis, of course,
it's
we're
huge number.
Yes, but the turnout, we were at 100 million early votes cast before General Election Day. I'm sure everyone that voted on Election Day had similar long lines, at least if you went in the morning, an hour, 2 hour long waits. So the turnout was massive. It was much greater than it was in 2016. Here is the map that was based off 538. So Arizona, Nevada were correct. It looks like Minnesota, Wisconsin, and possibly Michigan is correct. I think these are going to go Nevada and Michigan and Wisconsin are likely to go to a recount because of just how low that margin is. Florida went overwhelmingly for Trump. It was a Hispanic turnout there, specifically the Cubans. They turned out, I think it was a plus 13 over 2016, which led a lot of the predictive models to start saying, well, Arizona and Nevada are likely to go for Trump because of it. Early on, the theme was, well, it's a Hispanic election.
Yeah.
So that turned out to not be a good predictor either. So Florida didn't go. We're still in works on Georgia, North Carolina. If I had a handicap, North Carolina is certainly going for Trump, and Georgia is I think, likely to go for Trump, but it's still too early to call, and the margin of victory is probably a recount as well.
And those margins are larger than they are in Minnesota and Wisconsin. That's where they're razor thin,
Right,
and in Nevada.
In Nevada, right. The Libertarian candidate has more votes for her versus the spread between Biden and Trump. So it's very close.
So at the time of this broadcast, these have not been finalized, but who knows when we're really going to know?
Well,
it could be the end of today, the end of the week.
What
are
and
your
who knows
thoughts?
what's happening right now? Because we prepped for this. There's a few hours between when we look at the data last and when we're here live. So maybe it's already determined, and we look like we don't know what we're talking about, which is true. Another thing though that we looked at is we said, well, what about the polling agencies that got it right in 2016 and Brexit?
Right, how did they do?
Well, it looked like, and they were all beating their chest with pride on the Florida results because they called that quite well, but the Trafalgar Group had Trump dominating and having a landslide victory, electoral and popular vote. That didn't turn out to be true either. You can see Arizona, Nevada, we know what way they're likely to go, at least they're close. Florida, North Carolina, and they actually had New Hampshire going for Trump as well. It was
interesting.
It took a little while to call, but that shouldn't be in question, unlike some of the other states as well. So that was Democracy Institute. So this is the Trafalgar Group here, which they had a very similar outcome to what we saw last election, where Pennsylvania and Michigan would go for Trump and he would have a 302. So it doesn't matter what poll you look at, they were all wrong. Even on the turnout, right? It was going to be an early vote that was dominated by Democrats and a general election that was dominated by Republicans. I live in a precinct that goes very majority for Democrat, and I promise you everyone that was in line was not a Republican. There were a lot of Democrats in that line, probably majority of them were Democrats. So the polls we can just toss these out. Whether they get the actual outcome right on who wins or not, the polls have just demonstrated that they are not reliable to make these predictions off of, and there's good reason, because it used to be in 2010, before the landline or the dominant way that we talk to people, and then it moved to cell phones, we would get a 50% reach. So half of the numbers that you would call, you get somebody, you can get a sample. It's less than 2% now. Sampling
must be a very unique thing today because of all the different means of communications.
Right.
So let's talk about Pennsylvania, though.
We can talk about Pennsylvania, but I think we have a different state up.
Oh, do we?
Yeah, we can bounce around.
Things keep changing so fast. All right, let's talk about the Milwaukee and Wisconsin.
Well, this is very close. I think that at the end there will be an advantage of about 15,000 for Biden, and these are numbers that were early this morning. Mm-hmm. I think the turnout at the time was 91%. We're well at 98% at this point, but it's so tight. And then whenever we were looking at, well, okay, what counties have reported? What do they typically go for for Trump? What do they go for, or Democrat, Republican, Trump for last election? And whenever we said, well, if we just assume those results, there was another 65,000 votes that would likely come in shortly. 30,000 would go for Trump, and 35,000, so there would be a net loss of 4,500 whenever there was already a 10,000 vote advantage for Biden. I know I threw out a lot of numbers there. The point is it's very close, but it looks more favorable. I'd give a 75% odd that Biden does take home the Electoral College. We know it's going to be contested, though. President Trump has already said so.
Well, he's declared victory from what I understand, but now he might be backtracking.
Well, I think he said they won. He said they won.
They won something for sure.
They won. But it's going to be a very contentious next 4 years, no matter what the outcome is, because if, let's say that Trump is able to go to the Supreme Court and it goes in his favor, that he's able to get this turned out, those that voted Democrat are going to feel like the election's stolen for them. whenever you look, if you're a person that voted for Trump, and especially if you're strongly in favor, and you have felt that the media is corrupt and there's a deep state, and then you're getting into late in the evening with substantial double point leads, and then 4 in the morning all of a sudden you have 14-1 Democrats, and it's just enough to eke out just above what you need to win the state. No matter what the outcome is out of this, whether the Supreme Court sides with Trump or not, there is going to be a sizable part of the population that feels like the election has been stolen from them. And long term, we think that's a political risk. So that is just the scenario that we're in. It would have been much better to see one or the other have that landslide victory versus where we are right now for political reasons.
So what you're saying is that regardless of who wins,
right,
the other side, those voters are going to feel like the election was stolen from them,
right,
because of the narrow margins, and it would have been better to have a wider margin so that you wouldn't have such a divide. So how might that impact decisions that are made that could impact the market, the economy, and so on?
Well, in the short term right now, so we'll look at a slide here in a little bit, but whenever it looked like Trump was going to secure the victory and the yuan was selling off in the market, the Vegas betting odds moved up north of 70% for a Trump victory. What was that? What were you asking?
Yes. Well, so, because we have this divide,
yeah.
How could this impact decisions that would ultimately impact the market and
right, the short term. So the short term. So that's backwards. Sorry, a couple hours sleep. Losing the question. So the short term, we think that when we look at the market, the way that it was trending, first positive because Trump was going to be president and there wasn't going to be much change. Then it sold off whenever it started to look like, well, no, actually Biden still has a shot at this. But then as these results came in and it was clear that the Senate is likely to stay Republican and the Republicans were picking up seats in the House, the market realized that there's going to be some gridlock and log jams within the government to push forward any plan without some type of compromise. The market began to rally out of that. So that's in the short term. The market is indifferent because it's not that blue wave. So it's moving on and it's pricing. Pretty much it's taking out what we lost last week and putting it right back in. So we think that is good for the short term. Midterm though, you're going to have a lot of whoever wins this election, likely Biden, you're going to have a lot of pushback within the political framework. Not a lot of cooperation. Does a fiscal stimulus bill get passed? Do the Senate really try to handicap things to make it look like President Biden isn't able to manage the economy, and we start to see things because the money supply and other factors are really signaling some concern. And now that you can't get a partisan agreement and unlikely to get a bipartisan agreement, we think that in the midterm, we'll probably be selling into the strength and adding some defensive positions.
So let's talk about some of the things that are going to impact it, because one of the things we've been waiting for is a stimulus package. And we've also been concerned about the money supply, as you're saying. So if there is no stimulus package passed, how will the market react?
So if we look at this money supply, it's still very high historically. We're around 10% on money supply growth. That's robust, but we're down from 60%. And a lot of that increase was because of the fiscal stimulus, the Fed acting. We think that there's going to be more political gridlock, so we're not going to see another one of those, at least to the level. And we need one because of how much the money supply has dropped. So there's not enough new money to push the market up substantially, other than some of the uncertainty in the election getting priced back out of the market. So we do think we'll get that short-term rise. But after that, then this is probably going to start to play a component. And we're going to watch it because we don't see the money supply getting expanded We do think the money supply will still grow for some time, so we're in that stagflation risk area.
So what do you think the Fed could potentially do if there's no action on the part of the government? Would they pull any tools out to try to help the economy continue to move into recovery?
They've created a lot of new tools, and I think that they can continue to create tools, but at some point they have to push the interest rate negative, and they say they don't want to do that. So they can continue to provide support to the market by stepping in and buying individual securities through ETFs, which they'll likely do, but at some point they would have to push the interest rate negative, and they say they don't want to do that. This is all while, whenever we just saw the PCE report that came in this week, which is the inflation measure that the Fed uses, it was at 3.4% annualized. It's very high, it's well above their target, but the Fed is not concerned because of the pullback they want to average in now. It's not that it's approaching 2%, we need to start slowing down because that's hitting our target. It's like, well, we can run it hot because the money's, because we can offset some of the deflation that we've experienced over the year and try to average at 2%. So they're no longer using that inflation measure as a signal to begin tightening the money supply. So will the Fed act? Likely. Will it be enough? It's yet to be determined. And if they still try to stick to the we don't want negative rates, it's probably unlikely that it will offset the money supply in any meaningful way. That doesn't mean that you can't get into periods, because it's all about growth comparison. So are you coming from a high and you're low? Doesn't matter what the nominal number is. At some point, though, you move up and you're coming from a low money supply, and you'll see the market rally again. So we have said many times in these calls that we think over the next 12 to 18 months, there's probably 3 to 4 buying opportunities. So if we do see this strength, which is what we think we'll see in the market, we'll probably start becoming a little bit defensive in anticipation of seeing another correction and taking advantage of one of those buying opportunities.
So clients have been concerned about the election and the volatility and what may happen. Of course, now we're here, and I think what I hear you saying is that there could be a downturn in the market because of where we are and what could happen in terms of political gridlock, all of these types of things. Should they be in equities?
Yes, they should be in equities, because one, the inflation risk is substantial at this point, especially if the Fed's going to be there to act. But it doesn't mean that there shouldn't be creative ways of trying to. So we use portfolio insurance. One of the things that we've been adding and moving away from tech into a long short fund, and it's net 50%. Well, what does all that mean? Well, it means that.
What does that mean?
It means that it has enough equity shorts in the market where they see weakness, so that if the market moves down, they have something moving up to offset it. So they're really only about 50% equity, but they're in the names that they really like, and they have they've done well. We like their positions, and it'll create a diversifier in the portfolio, because we don't think the bonds are going to act as that diversifier. We think the bonds are going to be very correlated. JP Morgan was just out, or maybe it was Morgan Stanley, on they think that a 100 basis point increase on the bonds is likely to happen over the next quarter. Well, that would be a substantial drop in the value of bonds. Wow. Now, whether that turns out to be true or not.
What's their rationale for that?
Similar is the amount of stimulus and monetary policy is going to dry up with this contention, with the current political situation.
And so that'll create a higher demand for bonds to be sold at a higher interest rate.
Yeah, well, if the Fed isn't stepping in a meaningful way, or the government is trying to raise capital, but there's not a lot of money getting created by the Fed to fund that capital, then you're gonna have interest rates move up.
So how will the international markets react to this change, do you think?
Oh, it's a great question. If you go back to our slide where we talked about the baseline scenario, so we have said for the last few weeks that we think the highest probability is a contested election.
Yes.
Here we are. We're going into that. If that was the conviction, we'd want to underweight U.S. versus non-U.S. equities and short the dollar. I think that's a little too aggressive to just completely do that to the portfolio. We have emerging markets up, we have gold. So there are things that we've done to try to hedge, because there was the likeliness of a Trump landslide, there was the likeliness of a Biden landslide, but we'll be looking at our positions because international should do well. Now, Europe is not without its problems. If we go back to that coronavirus slide, I'll just have the conversation. We are at almost 100,000 cases a day for the coronavirus. It does look like it's starting to slow its growth rate, so maybe we're beginning to kind of edge up on that roller coaster ride. That's not the case in Europe. It's double what it is in the U.S. And when we look at death rates, they're also almost double what it is in the U.S. And they are coming back with their lockdowns, despite the World Health Organization saying, hey, quit using the lockdowns as the main way that you're fighting the virus, unless your healthcare system is being overwhelmed, though the death rate is high, it's not nearly what it was in April, May on the cases. So their economy has got its own issues. So the theme here is that it would only impact the U.S. with this contention, and the rest of the world would be fine because it's very systematic to the U.S. Well, that's not the case. There are other problems around the globe at the moment.
So, one of the reasons, or the arguments that Democrats were having against the Republicans is they felt that Trump didn't do a good job in terms of managing the coronavirus. Now that Biden is likely to be elected, do you think that would lead to more lockdowns that could then stall the economy?
It could. But if we look at Sweden, that I know it's been a pariah, but if you just look at it, they are down to about 2 or 1 deaths a day on average. They have hit that herd immunity. They're not wearing masks or social distancing in the way that everyone else has. I would think the U.S., because we've had such a rough go at it for longer, we're having lower susceptibility. That's why we're doing better than the EU at the moment. We're probably in the 7th inning of the coronavirus. Now, the FDA doctor, his name's jumping out once again, 2 hours of sleep. He was warning of a pandemic in the next couple of weeks. Well, that was a couple of weeks ago, so we're there. We haven't seen that level of concern. There's certainly an increase. We've seen the deaths trending. That tells me that, yeah, we're in the 7th inning. Could we see a final big surge? Certainly, we hope not, but at some point the virus will run its course as it did in Sweden, and we will just be able to pass through it. Now, it's going to be here for a while, but it won't have the same effect.
Right. I remember in one of our earlier market commentaries, we were talking about how there was a likelihood that the virus would spread regionally, and you'd have more regional impacts. And really, that's what has happened.
Yeah, absolutely.
Even when we had the Spanish flu, it was almost all gone. But then in the last month that it was around, all of a sudden Arizona became a hot spot.
Right.
So it's not going to go away, but I think that's what we're going to see is this moving around, and so you'll have localized or regionalized disruptions for supply chain and those types of things. But other than that, I mean, would we think that there would be a significant lockdown that would, really truly derail our economy?
Other than political, there probably isn't a good reason, and the World Health Organization has said this, separate the political motivations, which are what they are. As you were pointing out, the hot spots, or where the cases are actually growing, are in the areas that they didn't really grow much before. We're not seeing it on the coast. We're not seeing it on the Sun Belt. We're seeing it in the northern Midwest and into the Midwestern states, especially the rural areas and away from the cities. That tells me that we're not seeing it in those others. That they don't have enough susceptible people to hit that tipping point where all of a sudden it's spreading rapidly. Once again, there are plenty of people that haven't had it, so it'll probably be here, but we're not going to continue to see massive surges the way that we have.
Well, let's hope it continues.
Hey, let's hope that our non-medical diagnosis.
All we're doing is looking at the stats and the trends, right? But unfortunately, the virus is more than what we can comprehend in our own economic theory.
Well, yeah, and every argument that you can come up with on why how the virus is going to act, you can find an example of how it didn't act that way. We certainly. What we've learned in 2020 is how little we know about viruses.
Right, and it hasn't even been a year yet, so and look at how much we've had to go through.
John, here's an interesting slide that I'd like to touch base on, since I think it's more likely that we're going to have a contested election. What are the dates that are important?
Yes, absolutely.
So on December 8th is the safe harbor day where the Electoral College votes are selected. And then on December 14th, the Electoral College does vote. Once again, handicapping, I say 75% odds based on the current movement, what is still remaining out there in the states that Biden will have enough states to take the Electoral College, but then we have the Supreme Court decision that Trump has already laid out in the direction that they're going.
So what happens if it is contested? It's in the Supreme Court, and now it's December 8th, and there's not a decision at the Supreme Court level.
Well, the market's going to be fun.
That's what I'm wondering about.
It probably will be expedited. The Supreme Court will either make a decision that they are going to adhere to the Electoral College vote or not. I think Trump, whether it's accurate or not, the vote by mail scenario, the narrative, depending on the way you view it, is certainly playing out as we feared it could, creating uncertainty in the election. Now, proving voter fraud, whether it happened or not, is another matter. It would be very difficult to do. Ultimately, we think Biden will likely win, barring these recount states. If all of a sudden there's a lot of these vote by mails or absentee ballots disqualified, which is certainly one of the risks that we talked about that Democrats were taking on by going a vote by mail route. So,
well, that was one of the things that we saw when we had the Florida recount with Gore.
Right.
Because even though there was a margin, as I remember, when they did the recount, that margin actually did shrink.
It did. They wanted to continue to recounting until Gore won the election, which obviously gave the Republicans a lot of ammunition to push back on them. The Democrats could easily come back, and it looks like that there was voter suppression in Florida. So this is what happens whenever you let the political parties start to play games and the attorneys come in. It's really difficult to determine what the outcome is. And early on, we had said, and I think we got some criticism and pushback based on a misunderstanding of what we were saying, is by adding the vote by mail, we were adding a lot of political risk to the election because it was such a different scenario. And I think we're going to see that risk play out.
I think the mail is always a risk. I mean, I've sent in my IRS estimated payments, and for whatever reason, they get there late, and then they're not found. So there's always that opportunity that something is going to be missed in the mail.
And you have 6 states that are going to have different ways of interpreting that law.
Well, we'll see.
Stay tuned in on the weekly market update.
So looking forward then, the recovery, people are very concerned about where we are, while as far as we've come and all those great numbers that we've had with regards to the industrials, the GDP growth, we've gained back lots more jobs. Unemployment is still high.
Yes.
People are still worried about getting a job and paying their bills. We still have people that are unable to pay their rents, and we have bankruptcies on the horizon that we could see coming in increasing amounts. How does all this bode for our view of the market going forward?
We think it's going to be choppy. We do think that as some of the uncertainty is priced out, we'll have an opportunity. The market does seem to be rallying out of this, but we don't think it's handicapping those risks that you just talked about well. Like always, we'll depend upon our signals and our proprietary process. It's driven us in good spots so far. We are going to be diligent on tracking that, and if we look here, I won't get too technical, but it looks like the market is finding some support, and whenever the support is at a higher level, that indicates that the trend's going to go up. There is still this tit for tat thing that I think is going to play out with the Senate not supporting bills that would help the economy, because it's going to be President Biden, and they'll want to say, look, President Trump had this wonderful economy,
Right.
and now we elected Biden, and look at it, it's just a complete catastrophe. I think that political risk is there, so we will be watching it. But the thing is by looking at the money supply, I think that gives us a really good advantage. Very few people look at it, very few people understand it. They've been saying that the coronavirus is the reason that we had the sell-off last week. It wasn't. If you go back to the second Sun Belt, we saw that the coronavirus cases were going up, and so was the market going up. So these simpleton explanations that are often put out on in headlines to really get people to click, we just don't think are really, they're more noise than anything else.
Well, don't you think, though, that coronavirus is a much more interesting thing to talk about than money supply when you're at the front page of the Wall Street Journal, the New York Times?
Absolutely.
So of course, the papers are going to go out and grab the most interesting and spectacular things. But that's why we're here, so we can go look at what's really happening.
Well, we're just trying to see if we can make sure that there's a spread above the benchmark, because as uninteresting as the money supply is, if you see your portfolio higher than the benchmark, we hope that you find that more interesting, and we hope that it continues to provide results similar to that.
So let's talk about cash, because we had raised cash, we moved to that 36-month target, and then now we're thinking that we may go through some choppy times. We're also going to have some opportunities to go back into the market. Should we be moving more to cash? What would be our view for cash for our listeners?
We still have the
now?
We still have the 36-month holding. We've said that if we got a significant sell-off, we might consider putting that in, but we wanted to see the money supply begin to increase. It's not. Last week, with that sell-off, we were down 5-6% across many of the indexes. We actually sent an email to the lead advisors to say, cautious, don't pull the 401k money if you're doing a rollover at the moment. Wait. And then yesterday, when we started to see a nice rally over the last couple of days, we said, go ahead and pull it. I would still make that case now with this rally. If you're looking at 401k rollers or anything where you're going to be out of the market, now is probably a good time. That being said, the Fed will act, the government will act, because if, let's say, the Republicans start to drag their feet and it really gets bad, just like Speaker Pelosi was getting a lot of heat from not passing the second stimulus package, you would get that same effect. So the government will act. So it's just going to be a tumultuous, hard investment environment going forward. But we have a process, and that process we think it gives us the best odds of being able to manage in this environment.
So do we have any changes in our themes, just given all of this information?
Now that I'm hoping to eventually not have the election in this weekly update.
Yeah, I think I'm getting kind of like we were getting coronavirus fatigue. Now I'm getting election fatigue.
Right, and they're both still in here.
Right.
And it looks like they're going to be here for a little bit longer. But what I would like to get into is just some of the movement. So Texas went overwhelmingly for Trump. That was actually a very competitive race for quite some time. And I think over the next decade, Texas is going to continue to become more purple. And it's because of this movement, this work from home, work from anywhere movement that we think is going to gain traction. I really would like to get into that because I think that will help explain some of these theses. But at the moment, no change.
Yeah, I do think that would be interesting just from understanding how the economy is going to be changing geographically around our country for reasons like that. And
there's going to be a lot of decentralization and a lot of automation coming over this next
and this whole work from anywhere. Even we as a firm are working on how do we incorporate that going forward, because we do think that that's the movement of society right now.
Absolutely, and think about states like California, Illinois that are going to have significant budget deficits. If you can just pick up and leave the states, which we're already seeing, that reduces your ability to increase taxes on individuals that their network keeps them there. So we're going to see as much political problems that we're going to have, especially on a national level. There's going to be a lot of decentralization trying to solve those problems. So it's going to be an interesting decade.
So I guess kind of like with the movement away from the city, because we were having consolidation, people moving into the city, we'll have more decentralization where people are going to be less concerned about what the federal government's saying, and they're going to move to places where they're enacting legislation that favors whatever their desires are. Would you see that to be the case?
Yeah. Yeah. Yes. The same echo chamber that we've seen happen on Twitter, to the point that now there's other new technologies being developed because of the censorship of Twitter. You're going to see that happen geographically, where people are going to create their own microcultures and get into echo chambers in their communities. That's my speculation. We are going to continue to we have more freedom to find people we agree with, and I think that geographically we're going to do that. So
it's kind of it's that next step from nationalism. Now you're going to localism.
Yes, yes.
So let's talk about our performance, or the relative performance of the different asset classes last week, because it was a kind of an interesting week last week.
Yeah, so technology got hit fairly hard last week, but for the month it was doing well. The other area that whenever we look at the month, most of the indexes were negative. The small cap was positive. So we are still in the right positions, even with this value rotation, this industrials, the finance movement. So we haven't gotten the signal to make those changes. And for the month, even though it was a rough month, we see we've been in the right place.
What else should we be telling our listeners today as we go back to see where we stand with the election, since we don't have the final answer yet?
Well, we don't have the final answer. I would say please tune into our daily 3x3, where we're going to recap the 3 relevant market moving topics for that day, so that you can stay informed throughout the week. Feel free to reach out to your lead advisor, or John or I, anyone at Gatewood Wealth Solutions. We're happy to discuss the situation in your portfolio, your investment planning. We are eager to help, whether you're a client or you're somebody that's just interested in understanding what's happening currently. And then I would just, we got it right here. Press this button.
Is that where that is?
That's where it is.
I've been trying to see that on my screen.
So that you never miss an update, whether it's the weekly market update where you and I take a deep dive to give actionable advice so they can make informed decisions, or to get that skinny on the 3x3.
Get the skinny on the 3x3, which I think would be really important, at least for the next week or two, because of all the uncertainty around the election.
Yes.
for sure. So I want to thank all of our listeners again for joining in today. We look forward to seeing you next week, when we'll have hopefully a little bit more closure on the election, and as things roll out, we'll be giving you more information about our view on the market, which is a data-driven expert view. And what we want to do is to sift through the noise of the mainstream media so that you can be better informed about your portfolios and feel confident in the decisions that are being made. Thank you again, and good day.